Hi, I'm Saujanya and I coach corporate executives and business owners to understand finance in the most practical way. In one of our consulting assignments with a business owner, where we were advising him to strategize on cost control, we realized that segmenting his expenses would be an intelligent start which would ultimately help him to control costs. Then this helped me to understand that there is a possibility that we can do a video to help you all to get that particular technique of segmentation of expenses. So here we present you the kind of strategy which we provided to the business owner in terms of segmenting his costs. This particular segmentation should be helpful for an intelligent analysis. Here we go. The first segment we did was direct and indirect costs. Direct costs are those costs which are incurred in manufacturing of a product, and indirect costs are those which are incurred to operate the business as a whole. The second segment was to take the expenditure function-wise. Of course, the most important function would be the production. So the production expenses would be those which are incurred in relation to the production of a product or a good or a service. The other most important function would be management and administration of the entity. The third most important segment would be the selling and distribution, which is largely in promoting the visibility and promotion of their sales and distribution expenses, or to also do the after-sales service in relation to the customers. The second segment was quite useful. In fact, we went on more. The third segment, which we kind of suggested our client, was the cash and non-cash. The cash expenditures could be the total expenses minus depreciation, because depreciation does not have an outflow of cash. So the next segment was a non-cash, which were largely amortizations and depreciations, which did not involve a cash payout. So this helped to look at expenses in a different way. Now our segments don't stop here. The fourth was about finance and tax. All the costs relating to finance or borrowing related expenses means finance is a cost incurred in relation to borrowings from lenders or creditors or financial institutions. That could be the interest costs which are charged to profits. In this context, the other important statutory compliances were taxes. Taxes are those amounts which is owned by the entity to the taxing authorities. The fifth segment was largely between ordinary and extraordinary. All of those expenses which are incurred in the ordinary course of the business for the ordinary set of expenses, ordinary activities, was grouped as ordinary expenses. And those expenses which were extraordinary in nature were grouped separately. This helps in controlling those expenses. Extraordinary could be controlled. So we understood the analysis in terms of how it was occurred, when it was occurred. The sixth segmentation was expenses which were allowed by the income tax, because we took the taxation also into consideration, and those expenses which are not allowed. So those expenses which are related to business would be deductible expenses, and those expenses which are not allowed by the income tax would be disallowed. So we just understood from that perspective as well. The last and the seventh segment, what we kind of focused, was incurred and notional. Of course, the notional expenses are not considered in the financial accounting perspectives, but it's more of a costing angle, a management consultant's angle. So we said, what are those incurred expenses, which could be accrued, where the obligation by the entity to discharge towards that expense has been established, and hence that has to be captured in the profit and loss account or the income statement. And there could be certain expenses which are paid as well as considered as incurred and included in the profit and loss account. But the comparison was in notional expenses which are not charged to profits, but they are definitely useful in comparisons for decision making. This helped us to advise our business owner with whom we were giving him inputs for strategies to control costs. I hope these inputs and 7 segments would be useful for you as well in making an intelligent analysis. To have a quick recap, we have come up with these 7 set of expenses, 7 segments of expenses based on our consulting conversation with the business owner. The first one being direct and indirect expenses. The second one was function-wise. Third one was cash and non-cash. Fourth one is finance and tax. Fifth one is ordinary and extraordinary. Sixth one is expenses allowed and not allowed by the income tax authorities. And seventh one is incurred and notional expenses. I hope this one has helped you to have an intelligent assessment of the expenses. This could be applied to various scenarios in terms of a proprietorship, partnership, or a corporate form of organization. I hope you've liked this video. If you've liked it, please do share and comment on how were these segments useful to you. Please do visit this page for more videos on every Wednesdays and Fridays. Hope to see you in the next another important and an exciting topic which is in relation to balance sheet. See you soon. Thank you.